connect then with Sandip Sabharwal as well, who joins in on the fundamentals. Morning, Sandip. It's expiry week already at the end of September. What has been your key takeaways as to how we've been trending? The fact that now we've clearly put the brakes on that 3-week gaining streak. What's the sense that you're getting when it comes to the frontline banks in particular, which have underperformed?
So I think given that financials constitute the maximum proportion of the frontline indices and they are also the most overowned segment in the market. Uh, so to that extent, as the correction unfolds, we will also see financials give up gains. But that said, the financials overall are very well positioned in the complete market context. So I think as we see, as is my view, that over October, November, as we see some sort of sell-off in equities, that will be the time to look at buying some of the large cap banks and possibly some NBFCs if they come to decent valuations.
Right. Talking about NBFCs, have to talk about the Bajaj Finance fundraise, Sandeep. What is it that you're making of it? Because they're well capitalized with tier 1 CAR in any case of about 23 odd percent. But A, clearly they anticipate growth, and B, feel that right now is a good time to fundraise.
It's actually quite intriguing, Aisha, given their high capital adequacy ratio, why do they need to raise funds now? So I think it's very tough to understand unless and until they believe that it's a very good valuation to raise money. And you see the spate of IPOs these days. I think this week itself, there are so many IPOs. So every company believes that if valuations are good, better to raise money now than at a later time when they might not be able to get these valuations. I think that's the only explanation. Otherwise, given their capital adequacy ratio, I think the next few years growth, they actually don't need capital.
Okay, fair enough. Meantime, wanted to also understand your outlook then, Sandeep, when it comes to some of these metal stocks, owing to the fact that, as we discussed as well, that there is going to be an overall rise in prices. What have you made of the overall move that we witnessed in the metal stocks, and do you believe that we could now see some sort of consolidation?
The metals is not a very strong long-term story. So there will be periodic bouts of upswings, given the fact that what's happening in the Chinese economy and the fact that the global economy is expected to slow next year from where the rate at which it's going this year. The overall metals basket doesn't have any big story other than trading rallies. So we've seen some uptick in coking coal prices, input prices, and as a follow-through steel prices, etc., which will benefit these companies in the short run. But longer term, there is no big story in my view.
Okay, that's the take coming in on metals. The other intriguing piece of news which just came in was this open offer for 26% stake in Religare by the Berman family group. What are you making of that?
Yeah, so I think that follows the natural course because they had expressed interest by buying out a large stake from the overall markets and some shareholders. So I think it's a natural follow through of that process. Now, given the fact that the market price is much higher than their offer rate, so the probability they'll get anything is very little. So I think once they make the open offer, then they can also look at raising stake through different measures as if the stock price corrects or if they want to increase stake at a higher rate also later.
Sandeep, do you take a look, or rather, have you taken a look at JSW Infra? They're going to IPO. It's open for subscription today onwards. It's the first from the JSW group in, I think, over a decade's time, 13 years to be precise, and close competitor to Adani Ports, if you can call it that.
So from whatever I've read, it's a similar business model of both, and valuations are somewhat cheaper than Adani Ports, although not as cheap as one would like. But I think these days IPOs come at a premium. So among the set of IPOs which are on offer these days, I think JSW Infra is one of the more reasonably priced, although not priced as well as I would like, especially during an IPO, the pricing should be better. But I think given the way IPOs are getting lapped up, the promoters and the merchant bankers have no reason to price it lower. But I think it will get through, and longer term it should do well. I don't know what will happen immediately at the time of listing.
Of the way crude is headed and its bearing on our markets.
I think wise words were just spoken that there is no real correlation, so very little to add on that. So I think you can actually generate spreadsheets to show anything. So I think a lot of people come up with their own analysis depending on the time frame you take. I think crude rise beyond a particular level is specifically negative for sure for the Indian economy, given the inflation and trade deficit dynamics, because trade deficit in India still continues to be very high, and capital flows could possibly reduce given high interest rate, high bond yields globally, and reducing liquidity. So I think X of that, very little to add.
The other stock that I want to pick up on is Sandeep, HDFC Bank. And I'll come to our chartists as well and try and analyze the charts from here. I mean, after that analyst day that they had last week, quite a significant move on HDFC Bank. Just last week, Kunal was also talking about that he could actually see levels of 1300 as well. And 1300 is the price when the merger first got announced in 2022 April. That's where the level the stock actually drifted to when the merger got announced. But yes, the analyst day has mentioned that they do see some pressure on the margins, but this has been a rank underperformer.
Yeah, so I think when the merger was announced, I think it was very clear that it's not in the interest of minority shareholders. It was done more as a measure of convenience, because HDFC standalone, the business was becoming more and more difficult given the fact that competitive intensity in the housing loan segment was growing from banks, NBFC, everywhere. So they were possibly betting on getting some concessions from RBI. So they got some concessions on priority sector, but not much. And CRR, SLR, they could not. And also, unfortunately for them, their merger got triggered at a time when interest rates were actually rising. So that made the liability refinancing even more difficult. I think tough times should last for another 12 to 18 months at least. Now, whether the stock will underperform for that period or we see a sharp correction which takes care of the longer term underperformance, that is tough to predict. But a 1300 price is, if it comes, I think it will be an excellent price to buy at those levels. At these levels, current levels, I would not be a buyer. I would think that stock should trend lower.
Rudra, what do you see on the charts for HDFC?
Nifty is indicating that we could be in for a 12-13 point cut, but that is simply par for course. So Sandeep, is it that phase of the market now where you need to really just take a long break and say I will come back because there's nothing to do? Markets are not that expensive where you want to sell. Markets are not that cheap that you want to buy.
Yeah, so if you are fully invested, you can still look at possibly getting into some cash out of stocks which have very high valuations. But X of that, I would agree that there's no case for selling out any big time, because there will be a correction, but then the correction will not be, let's say, a 12-15% Nifty correction. So I think it might be just taking out 30 to 50% of the current move, which implies a 6 to maybe 8-9% kind of correction. So out of that, 3 odd percent has already happened. So that's what we would wait for. The mid-cap, small-cap indices movement has been much more aggressive. So there is possibility that if there is a sudden drying out of liquidity or outflows, there we could see more jerky corrections. And I would still think that the mid-cap side of the market provides us better opportunities than the overall large cap side. So that's where we will have to look out for. But I think that should be some weeks off.
The mid-cap index in this year is, that has just gone gangbusters, so to speak. Sandeep, are you still holding on to your position in Titagarh? Titagarh, yeah. You bought Titagarh at 140, 150, right? Or even lower, I don't remember now.
Yeah, we bought at 110, but then it became more than 20% of some portfolios. So we cut down on the holding because I don't want to hold so much of a particular stock. Then the portfolio just moves on the movement of that particular stock. So we've cut down holding, but we are still holding on to around 50 to 60% of the initial holding.
Any other railway or defense stocks, Sandeep, where you would have exposure and perhaps have cut back in the last 1 or 2 months?
Yeah, across the board on the high flyers, we have cut down, and I would think that there'll be better opportunities a few weeks down the line because, like we've seen, some of the railway stock actually sell off over the last couple of weeks. We will see that happening in defense also as there's too much retail participation in these stocks. So I think that will be the time to buy. Again, I think it's a repetition of what I'm saying because I think the entire mid-cap side as so category will have a correction, should have a correction rather. I don't know whether it will, and everything should correct together.
Sandeep, Hutco, नाम तो सुना होगा. I mean, is it going up because all other PSUs are going higher?
I was naam hi suna hai, but I haven't looked at it anyway.
I'm surprised with the volumes.
The land bank segment.
I don't know, Aisha, whatever may be the reason, but 18% higher on volumes, which are actually higher than that of Reliance Industries, it just makes you, think and stare at the screen again.